I just posted that, so it should come up with no problem. Everyone should have it. So usually on balanced days, I'm gonna grab my drawing tools here. Okay, so usually on balanced days, after 9:30, right, we can end up with something like, well, like this. Frankly, it can kind of go like this. There's three ways that it can look, and again, this is after 9:30. Okay, it can balance like this. We can balance with an upside bias, which means it looks kind of like this, but it doesn't go anywhere really quick. It's typically punctuated by NYSE tick that is plus or minus 500, and generally the best ways to trade it is from the outside back to the middle, and it'll kind of do this balance all day long. But it tends not to break anywhere. It tends to be a very slow grind, right? So your best hours of working trades in that with that scenario is between 9:30 a.m. and New York lunch, and it'll tend to just kind of scribble around. Now you can break out of balance; it's possible, but as long as the tick stays plus or minus 500, it's unlikely. Also, they make it look like it's really going to break out. You'll get a strong stick right at the top, and you're like, oh, it's going to break, or a strong stick down at the bottom, and it immediately reverses and travels back the other way. So that is the calling card of a balanced day. Traps on top, traps on bottom, settles in the middle. The middle tends to be the absolute worst place to trade, and the edges are the absolute best places to trade. Again, it can be balancing with an upside bias. It can balance with a downside bias. The way that often looks in the first hours, we can often, in this particular case, let me see where we're trading right now. Okay, so we're trading 1862, which puts us just underneath Globex highs. So we can often kind of do one of these breaks, come back in, trap below, work for Globex low or Friday's low, and then come back and either balance like this, or balance, or your balance could end up looking like this actually, where we break below, right? But then we catch back up and we close somewhere here in the middle. Either way, we end up with a balance with the extremes tend to be the best place to enter, and often those extremes will come in the first hour of the day. So that's the primary scenario that I'm working with. Now, there's a couple of things that would possibly change that scenario, right? Just because there's not a lot of news does not mean, particularly in this market, that we cannot move significantly. So what will that look like? Well, if that's the case, first of all, the key areas for knowing that we're not in balance is if we get above Globex high first and hold, right? Or if we get below Globex low and hold. That's your first key that we are not in a balanced scenario, right? The second key will be, once we do get above these areas, do we fall back below, right? That would create traps, and I would assume that we would trade to the other end of the ranges and then go into balance, right? So those are trading above or below, first key. Second key would be the tick, plus or minus 500. If you see an extremely negative tick or an extremely positive tick, and we're predominantly holding above zero or below zero, that balanced day scenario would end. And again, where you want to be focusing on that time frame is after the first hour of the day. The first hour of the day can actually be quite volatile and then settle into a balanced type of market. Friday would definitely be considered a long liquidation, and it is very common after a day of long liquidation. You can have two back to back, but it is very normal to have a balanced scenario. Most often in a down market, what that balanced scenario looks like is that we will open, break the downside, right? Find a support resistance level below, come back into the prior day's range, and then go into balance. Okay, and this is actually the second scenario that I'm looking for. Balance either way, but my guess is actually that we try to test Friday's low and Globex low, break lower, find support, push back up, go into balance. That's again, these are just scenarios in my head, and what I'm trying to do when I do this is I have these written down, and I have a game plan for each of these, right? I know that after a couple of things. First of all, the prime time for reversals occurs at approximately 9:30 in the morning until 11 a.m. So the first thing that I'm looking for is that time frame is, can we get a reversal and a push either from the upside or the downside? Okay, so what are the things that I'm always concerned about? And I'm going to hammer it again, and in a minute I'm going to go over actually the NQ chart from Friday so everyone can see what a open drive lower looks like and give you a heads up. So first of all, open drive up. What is that going to look like? Either one very strong bar up, followed by a series of small bars following higher. Very little rotation down. Remember, the first key to that would be generally less than a 2-point counter rotation. Okay? And secondly, at the zones, it tends to kind of take a pause and then bust higher. Take a pause and then bust higher. That's the first key that, so obviously this open drive higher categorized by either one very strong bar or 3 bars in a row. Okay? If you see that, you've got a heads up. Secondly, on trend day up, generally speaking, or trend day down, the markets will move in unison. Okay? That was one big key to flipping the scenario on Friday was, and I warned right out of the gate, NQ was not leading. This entire rally has been led by the NASDAQ 100, okay? And now there's 2 scenarios behind that. Either we could be having a rotation out of the tech stocks into blue chips, scenario number 1, or we're actually rolling over to the downside. That's scenario number 2. You'll notice ES hung up on the upside of that chart a lot longer than NQ did, but you'll notice NQ pulled it down at the end of the day. So I'm watching for a change in performance, but to this point, NQ has led for well over 6 months, and I'm not going to be very quick to flip that scenario unless I see true divergence, meaning NQ down, ES up, multiple days in a row, then I might have to change that. But until I see that change, I'm certainly going to stay on the course that's led me to success this entire time. The same thing with the open, by the way, on trend day down, right? Now, most of these days tend to be, most trend days tend to be punctuated by gaps in one direction or another. We have a very small gap, so it's possible. Also, you can have a failed open drive higher, which is what we had on Friday. Those are rare, particularly in this market, but you've got to be aware of it. And one of the keys there was that we were unable to sustain above Globex high. So if we open, it wouldn't be much of a drive to Globex high, it'd be 2 points, right? But my first clue that there's going to be a test of the downside will be we open, we drive right to the back of this 1864.50 area, right? We either clear above by 1 or 2 ticks and get back below, or we're unable to even get to this location, right? That would be a sign of weakness for me right out of the gate, and I would expect Friday's low and gap fill and Globex low to be tested. That would be my initial theory. If I have a significant enough rotation, and at this point, if we came back to Globex high, tested Globex low, that would be a nice fat rotation. I am probably willing to take a long first time into this zone. It needs to get out of here quickly for me, meaning I want to see a snap up, and I'll show you what that looks like here in a moment, but I want to see a snap out of this zone. I don't want it to get here and do this. Now, if it does this, it can still work, okay, just for my parameters. And with the strength of selling that we had to the downside, there's 2 things that could explain the downside. Either we truly had a new top and that top has failed, or it was simply options expiration, and somehow one of the levels on the options expiration that there was a very large player that was positioned incorrectly and it forced him into a long liquidation scenario, and strike prices started to get busted, and options traders had to react by selling. I'm not an options expert. I've seen it before. I didn't see anyone float that concept, so I'd say it was a weak concept. But if that's the case, right, we've had repeated days where we've taken this entire move, right? We'd come in the morning, have a little bit back, and then we've taken this entire move and gone right back and had a mirror day, right? That can happen even over the course of 1 or 2 days. Or over it can be a single day, like today, right? I wouldn't be shocked to see this, but I don't expect it to happen. And so one thing that y'all need to know about the scenarios, and for people that are new in the room, my basic premise is very simple. First time into a zone, after we open, like here, I expect a pause in a rotation for 2 points. Everyone needs to remember, even though I'm setting up the larger scenario, that is what I'm primarily playing for. That is my largest size trade that I put on, is when I come into a zone, I'm looking for 2 points, and I'm either exiting the entire trade or I'm exiting the majority of the trade and then looking for trailers up, depending on what size that you're trading. But all you need to build an account is 1 or 2 trades a day, right, for 2 points apiece, and you can build a humongous trading account. There's no doubt in my mind that you can do that. These additional scenarios are for traders that are a little more advanced or have a little bit more trade size to work with and can take the majority of the risk off, and they can start looking to the other sides of the zones. Also, if you see a trap, right, if you see us break above Friday's high, come back and close below Friday's low, and I say look to the other end of the range, that means this zone, for anything other than a quick bounce, becomes suspect. It's not that it can't work. It's not that we can't reverse out of here if we were opening up here back to the upside, right? It simply means that generally speaking, when we trap, I expect to trade to the other end of the range or another significant area. Globex high, Globex low, prior day's high, prior day's low. That's what I suspect. Setting those trades up specifically as trap trades generally requires a little bit more sophistication. So again, I want to emphasize, I let the market dictate to me what it's going to do. If we open up and NQ starts leading to the upside, we break Globex high on NQ and we keep going, I'm not going to be overly eager to short ES too quickly. Conversely, if ES busts and I see NQ getting weak as I did on Friday morning, I'm going to be cautious trying to press a trade to the upside, and I'm certainly going to be cautious on the downside. I'm going to be damn sure that I execute in the zones and that I stick to that 25-minute rule, right? The longest I'll hold a trade in the zone without moving my stop either to break even, right? Taking the scale and then moving the balance to break even, or just simply hitting the eject button out of the trade is 25 minutes. My trades, majority of them take significantly less than 25 minutes to get in and out of a zone, and it's one of the primary rules that's kept me actually quite safe in the last 2 weeks where it's been difficult. Also realize one of the hallmarks of this market, and I want to emphasize, is this right here, where we just constantly drive lower and lower and lower, or higher and higher and higher. It has made getting good trade location essential, okay? And on occasionally, it's made it difficult that even when you do get good trade location, it's exceeded the 25-minute rule because people are pushing so high and they're hanging up in these zones. That's okay. I'm not playing for today necessarily. I'm playing for the bigger picture, and I know that the market will come back to me, as it did on Friday, right? And I'll show that in just one moment. How am I doing on time? Well, so let me give you the key. So now let me go over the kind of the executive summary of where I will definitely be taking trades, given that we have no open drive higher or no open drive lower. So Friday's high, I will be taking a counter short. Also from this 1887 to 1889, I will be taking a short. This zone, I'm not sure that I will take a short in just yet, and the reason why is if we break above this area, I'm going to suspect it's going to force shorts in. They would hold, and it would force their hand and force them to drive above. Okay, so I'm not sure on this. I'll have to see the price action on this zone. Here and here, I'll definitely take a short. And the first time into the white zone, I will take a short back to the downside. Okay, so these three areas, somewhere in these zones, whether it's the front or the back, I don't know yet. I'll let the market determine that for me, but I'm looking short in those areas. On the long side, assuming we hold up here, we're opening at 1862, right? First time into this 1855, 1857, I'm probably willing to take a quick shot. It has to be, again, quick and snap out. I am definitely willing to take a long from this 44 3/4 to 42 3/4, and again, almost every zone down here. This zone down here, this 1833 to 1831, I'm willing to take a long here and take the loss here. Almost, I'm willing to push right up to the 25 minutes on this particular zone. This could be a very good place to get responsive buyers and to push back up towards Friday's low. Again, it would be hard to get down here if you look at the amount of travel. That'd be 1857 all the way down to 1831. So you're essentially talking about a 22 to 25 point move. The market would be very extended down here. The only exception is the last hour. If this occurs in the last hour, I will not take this trade. Um, and then, of course, every zone below, I'll pretty much look for a counter rotation from that point. So um, here, here, and here, all of these zones are below are attractive to me. Okay, so that's kind of the executive summary. If you want to know where I'm looking to take longs, everything in between here, inside this little area right here, I'm primarily looking for for these areas to set up trap trades for me, meaning between Friday's high and Globex low. I'm primarily looking for them to set up trap trades for me. Again, what I'd like to see is a break of one of these zones and then back up, or a break here, test here, then back up. I would expect if that occurs, right, excuse me, let me restate that here. Break of Globex low, trap back up, right? And this can occur quite quickly. My coaching clients know that, right? This can be quite quickly. And then I would look for a trade to the other end of the range. That would either mean Globex high, which is quite possible, and then an extended move up would take us all the way to initial resistance. If we get above Globex high and we've trapped at Globex low, this white zone then becomes, it needs to snap quickly out of the white zone, right? Because then it's likely to get into Friday's high where we'll take a short. So I think that kind of summarizes it. Obviously, inside the prior day's range, we're just looking for balance in there. If the balance scenario kicks in, and I'll know once the market opens, depending on what the tick looks like, right? If we get below, and the scenario I'd be most concerned about if I were trying to take longs is if we get below Friday's low, backside tested and fail, right? This zone becomes very questionable at that point. And then these zones down here, until we get down to initial support, assuming you're taking this one or this one, the snap needs to be relatively quickly, meaning generally less than 20 minutes. I better be able to get my scale going, right? From initial support and the zone below that I just showed, I'll give it more time. That's the executive summary part. I want to switch over to another chart that I have here really quickly. To my coaching clients, I sent out the trap trade chart. That's just a skeletal chart so that you know what the essential areas are to trade off of. This is the same chart, but with some trend lines drawn on it. Okay, and I'm going to break this down for everybody really quickly. So, if y'all can see this, okay, and I know that there's a ton of color there, so I'm going to start removing the zones. But there's some trend lines that you should put on your chart. Okay, the first one that I'm concerned about is this blue channel right here. Not concerned, but using it for guidelines. We've been bouncing off this channel up and down for quite a while now. We broke out above that channel on Friday. We fell back into it, and we've pretty much been bouncing from the top to the bottom. The bottom of this channel will put us right down to initial support. It would not be shocking, right, to see us get down to initial support, see buyers the first time in, even with a big push back up, then see it break and come back in here, and then get responsive buyers and get back above that and close within the bottom of this range. We've generally been traveling. Another characteristic that I want to show here really quick is we've been traveling from the top to the bottom of this range. Again, this is one of those mirror days that we discussed, right? Straight down one day, straight up the next day. So I'm on alert for this. Remember what will characterize this. Small rotations down on the upside, large rotations up. Just like it was the opposite on this day, right? Large rotations down, small rotations up. Well, this was the exception. This was Fed here, right? We had that same scenario just a couple of days ago, right? Large move to the downside took place over 2 days. You'll notice the second day after the first move down, we balanced the majority of the day. Okay, we had decent movement in the first hour. Actually, all the way up into New York lunch, we had decent movement up and down. And then the afternoon, we went to a balanced scenario with a downside bias. Next day, we gapped, and we retraced the entire move all the way back up. Then we took him within a day, went back to the bottom of that range. So that range right there has been going for multiple days. Okay. Also, from the underneath part, we have a trend line coming up. This has been a very long trend line. Okay, and we'll run into that just below Globex low. Okay, so it's certainly certainly wouldn't shock me again to break this, find support either just slightly below, and then pop back in. It's uncertain because of the range. Again, I'd prefer to have it from here or here. I want to watch a backside test also back in this area for a move back to the downside. Oops, I didn't mean to do that. And then the last two that I would have on your chart are these trend lines from Friday, the two top trend lines, and then the more aggressive downside trend line. Again, we'll be opening right at 1862, and it's going to put us right underneath this downtrend, this more aggressive downtrend that started Friday afternoon to the downside. So in order for upside to occur, right, you already know this trend line must be breached to the upside. If it does not get breached to the upside, okay, there is no upside. Okay, it has to occur, whether it occurs late in the day or early in the day. We got to get above this point, right, to change the trend. Furthermore, as we get more extended up, this is the second major hurdle. Again, I don't trade off of trend lines, but look at where they'll be hitting the particular zones and rejecting out of them. They'll be coming right into these areas, and I realize there's a lot of lines on here. I'm going to strip this in just a second so y'all can see that. There's a lot of lines here, but again, these make logical areas to see where we could get rejection down, right? And then at the bottom of support, right, we're right at the bottom of that channel that we've been bouncing back to the upside off of, right? Just below. So these are important areas on the chart when they line up with rotation size and zone. Okay, so I'm gonna copy this chart real quick and show you what that looks like stripped down. I don't want to destroy the chart. And then I'm going to remove horizontal lines. Okay, there you go. That's what that looks like without anything in here. Okay, also because we're having balance day, it's certainly possible that we end up with two scenarios just based off these trend lines, right? We end up with something like this. Okay, where we're just going into, obviously we're forming a pennant there, right? And while I don't trade pennants or put a lot of faith in them, right, break to the upside will push us for a back to test back up, and then this could generate a break to the downside. It's just something I watch, again, for guidance. You'll never see me call out pennant, you know, bearish, bull flag, bear flag, any of that crap. I don't call that out. It's just simply low percentage stuff to bank off of it. They're more like guidance within the zones, okay? Again, when we get down to the lower end of this range, I would suspect that the first time we get down here, right, it's happened so many times that we are going to see buyers snap back up, at least the first time in. If we break, it's totally common to break, even travel as much as 10, 15 points away, and then recapture that moving average either that same day or the following day, and then push all the way back up to the other end of the range. Like I said, the majority of the time, the reason why I say this, the majority of markets, let me go back here real quick to the volume profile. And I'm going to go take us back to a time when we actually really did balance for extended periods of time. Markets like to balance across extended ranges. They don't constantly break out, break down. We balance over extended ranges. Okay? Balance. Okay, balance. And then this is a great sample, right? Long liquidation, period of balance, right? And then we break the other way. Long liquidation, balance. This is a case where we broke below and then they tried to push it back up, and then we went into a period of balance, right, where the easiest places to trade are high and low. Now, I don't know that that will happen. We've been driving so long, but the market, if you look over the past decade, has constantly returned to this type of scenario. Breakout, balance, breakdown, balance. And I'm going to keep, since I know over the long term that this is what the market has repeatedly done, and I'm certain that it's not different this time, and I'm quite certain that we'll return to a balanced scenario. So if we go to a balanced scenario as opposed to a constant grind higher, what would make sense to me to have an extended range of balance would be something like this. Top of balance, bottom of balance, right? And we might have some extension essentially down here. Maybe it might be a little bit lower than this, but that would make perfect sense. And then also 1855 looks like it's going to be the middle of this balance range. We've been rejecting off of 1855 back to the upside and back to the downside below it. Okay, so that would be middle of the range. Again, middle of the range tends to be a difficult place to initiate a trade. On the edges tends to be the easiest. If we break below this 1820 to 22, that would let me know that we're probably going to come back in and re-auction a lot of this stuff that's been poorly auctioned, but that's probably not happening today. I'm not concerned about it. If it comes up, I'll give a scenario for that. So again, I'd be looking for ping pong going on, which is great. We can make a ton of money in ping pong. I would be very satisfied if we did this for months. It would be fantastic for me. So I think I covered that that scenario pretty well. I want to go over one thing from Friday. Okay. Yes, this is Friday. A couple things I pointed out on Friday. Again, with the trend lines. This was the top of that larger range, right? And excuse me, I don't have the larger range here. These are the intraday trend lines, the more aggressive one and the least aggressive one. And the first thing I pointed out was in order to get downside, we had to get above, excuse me, below this. Without getting below this, there was no downside. Well, we got below it. You can see it backside broke, backside tested, flushed. They tried to find responsive buyers here, were unable to do so, broke, backside tested, flushed. We tried to come back up for a test and couldn't do it. Okay, and this is that trend line that established about midday, right, mid-morning to New York lunch. Okay, and we never broke it. We need to break this to get any chance of getting back up here for a test. These were the trend lines from the prior day. I've now kind of eliminated them off the chart, right? So that's what I mean by downside break. Also look at the characteristic. Large down moves to the downside were smaller than moves to the upside, and that got even more exasperated in the afternoon as we trended down. This is hard stuff to fight. And then the last piece I want to point out, right, was that at each zone we got a pause and a rotation lower. When we come within a tick of a zone, I consider that a touch. If you look, we got a pause and rotation higher. Second time into the zone, the reason why I stressed the first time, okay, for the least aggressive traders, and I use all of us are, if we're trading futures, we're aggressive traders, okay? There is no safe trade. I want to reiterate that. It's 819. So this is the second touch of the zone. Second touch of the zone broke. First touch of the zone right here. Rotation higher for 2 points. Even on a straight down day, right? You achieve your 2 points. Second touch of the zone right here. They try to hold it. It flushed. Okay? We came down. We almost hit the zone below. I don't consider this a touch. It was still too much away. We rotated back up. First time into the zone, we paused. And we got a rotation lower. Okay, and again, this is a tick chart, so time-wise, this was less than 15 minutes in the zone right here. This whole thing was less than 15 minutes. We came in, we rotated lower, we paused, and then we broke down to the lower end of the zone. First touch of the zone, rotated back up. It was the end of the day. You'd be nuts for taking this trade at the end of the day, by the way, but there it was, right? And then we, but the point of that is, even in a down day, in a healthy market, right, where we're getting two-way trade, that's two-way trade, okay? Each of these zones becomes tradable. We get a pause. The first touch is the best touch. The second touch generally tends to work on a day where you've identified it as a balanced day. You should have a trade plan built for that balanced day if you're going to be trading that. I think I covered all the scenarios except NQ. Let me see if I can cover NQ here real quick. Where are my charts? Okay. Seem to be missing them. Let's see, view. Oh, I know what I want. Let's see here. Okay, by the way, larger picture, this is that trend line, obviously, that we're on a 60-minute picture that that would be a concern. I would have that marked off on a 24-hour. Again, that's right below 1855. I don't trade off the 24-hour. And you see this gets clearly violated multiple times, but the first time down, it did find a bit of support right down here at 1855, and it coincides with the backside channel test. Of this larger trend line. You can see also on a 1 hour chart, again this is ES, that we've rejected multiple times out of tests up here, we're doing the same. So when we've rejected, one of the things I want to look at very quickly, how far did we roll down? First time, 1880, rolled us down to 1860-ish, right? 18, let's call this 75, rolled us down to 1845-ish, right? So this is 30, this is 20, 30. This rolled us down from 1865, eventually all the way down to 1825, 40 points of downside. This particular move here, when we got pushed, this was the Fed day, right? This rotation lower pushed us from essentially 1867 down to 1845. Again, a 20-point move to the downside. And we just experienced from 1875 down to 1855, another 20-point move. So over a period of days, the moves have been a little bit larger. Intraday, they've been about 20 to 30 points, right? With the exception of this particular day, right? Most of them have been 20 to 30 points to downside. So between 20 and 30 points, right? You want to be cautious of getting overly aggressive, and you may want to look for responsive buyers down in this area for a pushback up. There's been no damage to this market, right? All we've gotten is a reversal lower out of highs. And I want to emphasize one thing. Again, one day does not make a bear market, okay? So don't get overly bearish. And it is quite possible, okay, that all we were doing was getting a rejection on an options expiration where they were pushing it lower. And as you can see on a 24-hour basis, we're trending higher here. And it is entirely possible that we were just doing a backside test, coming back up for continuation break, okay? So as long as we're in a bull market and we haven't had every 1% to 2% correction has been met with responsive buyers, and I want to emphasize that. We can get good trades to the downside, but there's no technical damage from a bull standpoint. From anyone other than a day trading standpoint, don't let these days color you as, oh, we're bearish, right? By the same token, don't let the up days color you as bullish, right? Because we've clearly been doing these crazy Ivans where we're just flipping very quickly. And what ends up happening to inexperienced day traders in this market, and particularly those who cannot control risk, right? The same guys that are buying gap and goes up here, okay, and are getting paid off of this stuff, are getting smoked, okay, are getting smoked in this stuff, okay? This is not pleasant stuff to go through if you're a trader, and you may want to make sure, since we've had so many open drives higher and open drives lower, that you've cleared that first 15 or 20 minutes, and you're certain that we don't have an open drive higher or an open drive lower, so that you don't get smoked in the process. It's not worth burying your account through this entire thing. I want to take one quick look at NQ real quick. Okay. Trend line I would have drawn on NQ from here to right here. We're going to open above this. I can tell you Globex high is sitting right here at 3654.50. Okay, Globex low is sitting way down there. And you can see they're pushing up again. Remember, we pushed up on Friday morning too. Okay, look for the open drive out of the gate and look for a failed open drive as well. 3634.75. So you can see in the overnight we held Friday's low, right? And we are below Friday's high. This is Friday's high right here. Okay, these are the critical areas. This is Globex high right here. Okay, so obviously it's essential. If we open right here and we reject right out of Friday's high, look for a test back down here, right? And the low, by the way, is just a hair lower. This is the area I'm looking for a potential trap back to the upside. This is the area I'm looking for a trap back to the downside. And then the test down here, I would suspect that we're going to get a test at some point, but I'm not certain. Again, I'm looking for balance after the first hour in NQ as well. We don't have to get it, but there's no news to drive us, okay? So unless we're just going to continue this long liquidation, which is possible, we generally end up with a balance. And most balance days, or my favorite balance days, look like this, where we close back in the middle. Okay, so that's a scenario there. That's what I'm looking at. If we look at a big picture on NQ, and again, y'all can drop off at this point. I've covered ES thoroughly. I just want to go over one last piece. You can see, here's the range, guys, that we've been in, and this is going back to February now, right? This is the top of the range right here. New highs above. This was the bottom of the range. Right here, you can see that we, if you want to call a one-day consolidation, this is currently the bottom of the range, right? In order to get downside, we have to get below here. And as you can see, we had a slight downtrend that had started here. I'm going to point that out right here. We just busted above it and then came back down. That it's sister to that trend line is approximately I'm going to go with right there, okay? And then there's actually a third sister to this, which is right here. I'm going to go with that right there. That's the next area of that channel. But this channel is clearly starting to point down. We could, if this holds, this low holds, we'd have a new uptrend. And then I'm trying to see where the last old uptrend is here really quick. And I would go with this right here. And so obviously the bottom of that trend line right here, I would expect to find responsive buyers the first time down. Again, we're at 36.39. In order for us to hit that today, it's going to come in around just below 35.50, which is obviously totally possible. It's about 80 points lower, or tomorrow is possible. That's if we get any more downside. Obviously, in order to get downside, guys, on NQ, we just opened, okay. Okay, so NQ is already pushing above its Globex highs. I want to see if it's going to come back in, but obviously responsive buyers here will be possible. We have to get below this point to have any kind of serious downside going. This is Friday's low. Okay, guys, I will talk to y'all later. Have a wonderful day. I'll call them as I see them. Talk to you later.